Good morning, everyone. This is Ryan Ender with your Wednesday, November 28th morning market commentary. We'll start in corn, although it has a little bit of the least news right now, and mention that today's ethanol report needs to see a bounce back from a slightly disappointing report last week. And looking forward, the number we're pretty much looking for here for the ethanol is 1075. That would meet the USDA expectations of 0.8% over last year. So again, ethanol's been running mainly fine for the most part, but last week was a little bit of a slowdown that we didn't really want to see, which probably aided the slide we've been seeing in this market recently. Also with corn, we always have to keep watching outside market influence with beans up or down 10, 20 cents on a given day and wheat falling 10 cents at one point yesterday. There's definitely sizable outside market influence on this market we need to keep track of. Moving over to the beans, we were thinking that this week could be a headline trading week, and we haven't been disappointed so far. Monday saw a headline from China showing how few sales U.S. made to China, or shipments to China, over the month of October. Really shouldn't have been a surprise in the middle of a trade war, but obviously trade took that pretty rough, being over 18 cents lower. And then yesterday there were comments from Kudlow that were basically mixed, but if you look through them all, they did look a little bit positive, so it was able to cause just over a 13-cent bounce back. So like we were expecting this week, no shortage of headlines. Again, the Trump-Xi meeting is actually on Saturday night. So it's going to be mainly 20-cent moves up or down from headlines as we wait for the actual meeting to take place. And right now, during this headline trading market that we have right now, we really have to take 20-cent moves with the appropriate grain of salt. It could just be reacting to whatever the latest headline is and not necessarily a major change in fundamentals. So that's what we're going to go with there. Well, the talk is going forward for what could happen if trade talks don't work out well this weekend. Yesterday was a conversation that we could put a tariff on the final $267 billion of products coming from China. Also, there was a side note that on $200 billion of what we're already tariffing, that rate could go from 10% up to 25%. Basically, that would actually be seen as positive news for the beans, for the fact that it's pressuring China to try and make a trade deal this weekend. Gives maybe a little bit more optimism and added some support to beans yesterday as well. Over in wheat, there was buying excitement when we sold 120,000 tons to Egypt previously, but since that headline, there hasn't been any backup news. Now again, selling wheat to Egypt puts a possible implications of two things. One, that our wheat is price competitive to Egypt, which it typically isn't. And two, maybe Russia's wheat stocks are running low, which is why we picked up that sale. So again, that will be exciting news if we can find more sales to Egypt, but again, with that only being one headline and not hearing any backup news, wheat's on the drift lower again. And likely that drift lower comes from the fact that last week's weekly total sales were only 330,000 tons. That is a disappointing number. So wheat traders will want to watch very closely to see if we can see any improvement on tomorrow's report. Moving over to cattle, we started yesterday with a 114.50 bid. Given that last week traded an average of 116.75, that's about the bid we would expect for a starting Tuesday bid from Packers. The 9,600 lower show this might imply about $1 higher cash trade, but there is one thing we want to point out here, that Packer profitability has slipped to 14.77 a hundredweight. That obviously is still a large number, but we do want to mention that there's been 2 times in 2018 where it's fallen under $15 and Packers have been reluctant to bid higher. It happened once in early August and again one more time in early October. As soon as that slides under $15 profitability, we've seen them stick with low bids and try and get away with not paying up for the weeks that we spend under $15. So we'll see if that is the case again this week. It's at least worth knowing here. Instead of just assuming Packers will bid higher as they did $3 higher last week, remember, with a profitability under 15, maybe we need to ease back on those expectations a little bit. So that's what we're looking at here on Wednesday. Give us a call anytime at 800-551-4626 or visit us on the web at allendale-inc.com.